Castor Maritime Inc. is a shipping company that was founded on September 12, 2017. The offices are located in Limassol, Cyprus. The primary goal of the company is to grow their fleet through acquisitions of new and modern vessels. Do you want to know more about CTRM Stocks? To quench all your curious thoughts, tag along with us till the end. Hello future billionaires, and welcome to Penny Stock Lifestyle. The channel where you get stock inspiration, motivation and knowledge to become the next future billionaire. Castor Maritime Inc. is an international provider of shipping transportation services through its ownership of ocean-going cargo vessels. On a fully delivered basis, Castor owns a fleet of 17 vessels with an aggregate capacity of 1.5 million, consisting of 1 Capesize, 6 Kamsarmax, and 7 Panamax dry bulk vessels, as well as 1 Aframax and 2 Aframax/LR2 tankers. Cyprus-based shipping specialist Castor Maritime has developed as one of the preeminent MOMO stocks in the market. Its share price has shot up 212% in the past 6 months, making it the most overvalued stock in its peer group. The company has benefited from its momentum and allotted a combination of new shares and warrant sweeteners to fund its expansion. However, the increase in CTRM stock has hugely outpaced the growth in its underlying business. Amidst this whole uproar, the company has been aggressively extending its fleet. It has more than doubled its fleet in just the first quarter alone, consisting of bulk carriers and a couple of Aframax tankers. Most lately, it purchased a 2011 Japanese-built dry carrier for about $18.5 million. It also published its earnings results in the past month, which were extremely impressive considering the pandemic's impact on the business. Despite its growth though, the problem with its share price remains to be a thorn in its side. The stock price of Castor Maritime Inc. rose by over 6% during intraday trading. Investors seem to be responding positively to Castor Maritime declaring a vessel acquisition. Castor Maritime had stated that it entered through a separate wholly owned subsidiary into an arrangement to acquire a 2015 Chinese-built Kamsarmax dry bulk carrier from an unaffiliated third party for an acquisition price of $23.5 million. The vessel will be presented to the company with a time charter contract associated with a reputable charterer at a daily gross charter rate equal to 114% of the Baltic Panamax Index. An estimated remaining term of about 17 to 21 months. This acquisition is anticipated to be consummated by taking delivery of the vessel within the second quarter of this year and is subject to the satisfaction of specific customary closing requirements. Castor Maritime Inc. was that company in February. Their stock price changed suddenly, and Google acknowledged by improving the way it deals with CTRM as a search term. A CTRM search no longer brings up helpful information about the CTRM software industry. Still, it now displays stocks and share applications with recycled Castor Maritime Inc., Castor Maritime. This small Cypriot-regulated shipping company has caught the attention of so many Reddit and StockTwits investors. The company advertised a significant dilution, and the stock plunged. This dilution essentially changed the calculations by experts. CTRM issued 192,307,700 shares for 65 cents and an equal number of warrants with a strike price of 65 cents. Since the share price had already dropped below the warrant exercise price before the offering closed, it seems likely that none of the warrants have been exercised. Still, the share issuance alone raised CTRM shares outstanding to more than 899 million. Suitable for the company and the CEO, bad for shareholders, the CTRM's book value was $177.684 million, $0.2512 per share. CTRM confirmed that the book value was $176.424 million as of 4/05/21. The April offering at $0.65 was therefore highly accretive to CTRM. The company's value increased from $176.4 million to $293.1 million. As a result of the dilution, The company's per-share value increased from $0.249 per share to $0.326 per share. The offering was also perfect for the CEO personally. The CEO had announced that the share price was overvalued. The CEO's incentives were not aligned with the share price, but rather to incentivize him to grow the fleet, no matter what happens to the share price. Assuming all the funds raised are spent on new vessels, the offering will net the CEO personally more than $1.78 million, and it could be far more. If, for example, the warrants are exercised, the CEO leverages the offering to 50% of vessels acquired. CTRM later sells the vessels for 80% of the acquisition cost. The CEO's fees will be around $6.4 million, excluding the 1.25% of vessel revenue he will receive while CTRM owns the vessels. However, the offering was not so good for CTRM shareholders. The CEO's announcement in preparation for the offering that the share price was overvalued and the disclosure of the precise extent of that overvaluation seemed to have dispelled some of the hype around the stock. The share price was 74 cents immediately before the offering, but fell rapidly and has lately been trading in a range between $0.4 and $0.5. A lack of detailed research has allowed a belief to spread on Reddit and stock twits that CTRM will have blowout earnings for Q1, which will justify the current high price to book. Talking about further dilution, CTRM has established a pattern of continuous dilutions to fund fleet expansion, 5 in the last 10 months alone. While CTRM has undertaken to pause dilutions for 45 days from the April 5th dilution, it is likely to resume dilution shortly after that restriction expires. It is now effectively impossible for CTRM to regain compliance with Nasdaq listing standards before Nasdaq's deadline of 6/28, other than by a reverse stock split. While a reverse stock split should not be a negative catalyst, it is viewed with trepidation by many of the denizens of Reddit and stock twits. Their expectation that it will be detrimental to the stock price may become a self-fulfilling prophecy. Further declines in CTRM stock price are anticipated as investors become more aware of the dislocation of current market capitalization from the company's current valuation, business performance, and realistic prospects. Castor Maritime's dilemma is that its share price growth has stirred attention away from its effective financial performance. Revenues for 2020 were at $12.5 million compared to the $6 million it made in 2019. Its EBITDA was slightly more than high price at $2.3 million than the $2.2 million generated in 2019. The company has accomplished exceedingly well in the past 5 quarters, growing revenues by triple digits. Moreover, it executes its growth strategy, doubling its fleet size in the past year. As mentioned earlier, it has already scored a few more vessels to its fleet this year. Moreover, it should continue funding and expanding its fleet this year and beyond with its equity raises. The dry bulk shipping market is growing, and the company anticipates a more favorable business condition this year. Therefore, it should pick up from where it left off in 2020 and finish off this year with a bang. CTRM stock has become way ahead of itself, and even its CEO agrees with that notion. It has been incredibly volatile of late, but it still trades at excessive levels regardless of its recent correction. The disturbing part is that it has taken the shine off its relatively extraordinary earnings. Therefore, investors looking for exposure to dry bulk shipping might want to invest in industry leaders such as Star Bulk Carriers or Eagle Bulk Shipping instead. CTRM stock has meaningfully improved after a considerable equity dilution. However, the company is on a fleet acquisition spree, and the renewed stock upside is possible once revenue growth accelerates. Further, internal cash flows will provide Castor Maritime to expand the fleet beyond FY 2022. With a steady industry growth outlook, the stock looks winning at current levels. Therefore, investors can disregard near-term volatility and slowly accumulate the stock. CTRM is a penny stock, and it's tough to say where the stock will be in 5 years. Given management's stated strategy of fleet expansion, which has essentially been financed through debt and share issuance, its debt and equity are both supposed to balloon going forward. They have already improved in the last few months. Since interest rates are going up, the company might feel pressured to service its loans and the related finance costs. While an upcycle might influence the company to generate some revenues, an undisciplined strategy could indicate that a downcycle might result in a weak position. As interest rates rose in 2009, the shipping industry witnessed many bankruptcies from highly leveraged companies. CTRM has been very active in the secondary share market since mid-2020 and has issued more than 450 million new shares and warrants since then. Its stock rally in 2021 led to the exercise of contracts, which further diluted the share count. Its joint share capital has increased by a whopping 3,800% after 2020. Going forward, the company could keep on issuing more shares since its authorized capital stock is 1.95 billion shares. The company's declared goal is to improve the fleet, which would cause more stock dilution. While fleet growth is positive, a healthy company should finance its fleet expansion through its operating cash flows. However, it isn't producing much in the way of these cash flows. As we discussed, most positives are already priced into the stock, and it doesn't offer much upside at this price. It's trading at an EV to NTM sales multiple of 36 times, compared to a multiple of just 4.4 times for Star Bulk Carriers, which is CTRM's much more significant and stable peer. Equal Bulk Carriers and Diana Shipping are trading at multiples of 3.5 times and 3.9 times respectively. There aren't many catalysts that can justify CTRM's significantly higher valuation. Therefore, long-term investors should avoid the stock. That's all for today, pals. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comment section down below. We are posting a new video every day with the most undervalued penny stocks in the market right now.